Now let's dive into our feature story of the day and discuss a $700,000 price prediction. My apologies on screen. I don't know why I forgot to update it from yesterday's stream where it was 150,000 prediction. But today we're talking about a $700,000 prediction for Bitcoin. Send it and let's get it. So this dude right here, Joe Burnett, I've been watching his videos. They're actually quite informative. I watched this video this morning before I set up the podcast and I said, let's discuss this. And here's what he wrote. I still admire Plan B's stock to flow model. The model is not perfect, but the principles behind the stock to flow and the halvings hold water. $700,000 Bitcoin within 12 to 18 months after the 2024 halving isn't just wishful thinking. It's entirely plausible. Here's why. Now, first and foremost, let's touch upon the stock to flow. The stock to flow model ultimately tells us Bitcoin will be hovering between $100,000 per coin and $1 million per coin post 2024 halving, leading up to the next halving in 2028. Now, Joe Burnett, he created his own model because that's what he does, but it's based off the stock to flow. And he talks about the multiplier effect. And then we have Samson Mow, who talks about the multiplier effect, the Veblen effect. So I want to touch upon all this stuff. But yeah, and if you haven't watched this, you got to check it out. And I'll include a link in the show notes below the video in the description so you can watch the full 7-minute breakdown of how he came to this conclusion that it's very plausible that Bitcoin hit 700,000 12 to 18 months after this halving, which would ultimately mean by this cycle peak before the end of 2025. Now, Samson Mow says, I think this year we'll hit 1 million. So let's discuss this as well. He was recently interviewed by Peter McCormick on the What Bitcoin Did podcast. So I want to break some of this down for you. So yeah, he says, I think this year we hit 1 million. If not this year, then next year, but it is coming very soon. Mow pointed out that the demand for Bitcoin is significantly outpacing the supply, with ETFs alone pulling in around 3,500 to 4,000 Bitcoins per day, which is 1.4 million Bitcoin per year, while the exchanges hold approximately only 2.2 million Bitcoin. So that answers our question from earlier. Someone asked JV, how many Bitcoin are left on the exchanges? And I said probably close to 2 million. Well, it's 2.2 million approximately. And he believes that this will rapidly drain the pool of available Bitcoins. Now, another thing we got to consider that Joe Burnett points out is the majority of the Bitcoin is in the hands of the long-term hodlers, over 80%. That means Bitcoin, which is not going to move and probably not going to be sold. Now let's discuss the concept of the Veblen effect, shall we? It suggests that as Bitcoin becomes more valuable, it'll become more desirable due to its perceived value. Facts. A great way to sum that up, FOMO. When Bitcoin hits all-time highs entering price discovery, retail loves that. For whatever reason, when Bitcoin's correcting at a great, buy the dip opportunity, they just brush it off. That's just the nature of human beings, I guess. But anyways, he believes that once Bitcoin reaches parity with gold's market cap, and estimated at 450,000 to 500,000 per Bitcoin, it'll cross a crucial threshold and begin to demonetize gold. I agree with that 100%. Here's why JB thinks we will demonetize gold, because Bitcoin's superior. It is the apex predator and gold is inferior. And I don't need to get crazy with a list of all the reasons why, but the first thing that comes to my mind, one is confiscatable, the other is unconfiscatable. One is relatively scarce, the other is truly scarce. That's all you need to know. Keep it simple, family. But anyways, quoting Samson Mow from the interview, once you cross the Veblen threshold, you start to demonetize the gold, because now this thing is gold. It's multi-trillion dollars. We're already trillion, but like 8 to 12 trillion market cap. And someone confirmed with me on yesterday's pod, it's actually right now 14.5 trillion roughly estimated for the gold market cap. But anyways, then you start to eat into gold because people see it as equivalent to gold. It's the new gold. Let me correct him. Gold is the poor man's Bitcoin. That's a quote from Max Kaiser, by the way, and I truly believe that. Now, Mao anticipates that media narratives will support this notion, further driving the shift from gold into Bitcoin. His prediction comes at a time when institutional interest in Bitcoin is at an all-time high, with major corporations and financial institutions adding crypto to their balance sheet. And as we all know, there is a halving event taking place in roughly 30 days. It will occur sometime in April. That's right around the corner. Many people believe we can hit 100,000 by the time of that halving. Keeping in mind, we just had a $20,000 monthly candle in the shortest month out of the year, which is historically a more bearish month. So we all know anything is possible. One more $30,000 candle for the month, game on, 6 figures. just like that. Now, in a recent thread, Samson Mao shared his thoughts on the potential approval of the Ether ETF by the SEC. He believes that regardless of the outcome, both approval and rejection scenarios are mega bearish for Ethereum. Mao argues that the SEC has foot-gunned themselves by approving the ETH futures alongside Bitcoin futures, which rationally necessitates the approval of the Ether spot ETF for the same reasons as the Bitcoin one. Quoting Samson Mao here, I'm going to read you the first tweet from March 11th and then the follow-up tweet. The SEC foot-gunned themselves by approving the Ether futures along with the Bitcoin futures, which means rationally they need to approve the Ether spot ETF for the same reasons as the Bitcoin one. However, this opens up a big can of worms because ETH is a security. Ethereum ETF approvals are further complicated by staking what kind of commodity generates a yield. He makes a great point. I also agree, and I've been calling it from day one. Since Ether switched from proof of work, such as the same protocol as Bitcoin, to proof of stake, what do you think the SEC is going to deem them? More than likely an unregistered security, but then again, there's ETHgate, and you just never know because they decided to go after XRP out of all the cryptocurrencies out there. So I'm just saying, but I digress. Nonetheless, what kind of commodity ETH prints 70% of its supply out of thin air? What kind of commodity ETH tweaks? Can I say twerks? Why not? Its own monetary policy at will. Good luck, Gary. And he makes a good point. These are all red flags on why the regulators are most likely to deem Ethereum a security, unregistered security versus a commodity. Bitcoin is the only commodity. Bitcoin is perfect money. And there's nothing else that will ever be able to say the same. Mao questions the nature of the commodity that generates a yield, which is a good point, and prints 70% of its supply out of thin air and twerks, JV says, twerks its own monetary policy at will. Additionally, Mao believes that the current price appreciation of Ethereum is purely speculative, driven by crypto traders as Ethereum insiders hoping for the ETF approval rather than genuine capital inflows. He predicts that if an Ethereum spot ETF is not approved, speculators will sell, while if it's approved, existing hodlers will sell, and no one will buy due to the ETF's structurally defective nature, as it would not provide staking yields and would incur management fees, resulting in an automatic loss of 5 to 6% every year for the ETF shareholders. So there you have it, family. Let me know your thoughts on the $700,000 Bitcoin price prediction from Joe Burnett and the $1 million price prediction for this year, for this cycle, by Samson Mao, and as well as the stock to flow, which finally printed that sexy red dot on the stock to flow chart that was official as of March 1st, which ultimately means we're officially in a bull run. Holla at your boy.